is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
I've listened to you for years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Oh, welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. Now, folks, follow what you love, and it will always take you where you want to go. Natalie Goldberg. Market-wise, let's take a look at it out here. We have the Dow Industrials down 47, NASDAQ off 24, S&P's down 4.5, gold contract down $29.40 at $1,146 an ounce. Silver down 71 cents at $15.58 an ounce. Platinum down $8 at $9.92 an ounce. Copper down 4 pennies at $2.32 a pound. Light sweet crude off a nickel at $45.89 a barrel. Bonds 10-year down 26, 127.18. 30-year off almost 2.5 points, 155.25. Both the 10 and the 30, folks, are coming back with volume. The bond market, the change of tune is there. This is the third change of tune, third time in about the last 5 months that the bond market has come down on volume. We're going to bisect and dissect that as soon as we get ready. Done with the rest of these numbers. King dollar down 491 ticks at 97.37. The euro up 51 at 109, and the yen trading at 121.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. So we're hanging at highs here. What we did yesterday, Fed announcement come out, bottom line, market goes up, has some juice behind it as it's going up. You get a flat market out here today. The SPY's trading at 208.65, where, the high of yesterday was 208.98. The SPY has to get back under 208.28 first. 208.28, that's ice, folks. It's just slightly over it. That's where we started the downdraft on the 20th of August. NDX 100. What do you have inside the NDX 100? Inside the Qs, this is what you have out here right now. Same deal. Qs are hanging at the highs. You have a lot of equities. We'll go through the equities that are down. There's equities that are down in a big way. Bottom line, though, inside those indices, they're hanging up there, up. We're at 113.82, and the lows of the high is 113.48. So bottom line, you got to back off. And the high that we're talking about inside the Qs at July 20th. The high of that is 114.39, and what you did yesterday is you got to 114.02. Now, gold contract. Check this out. Gold contract out here this morning. They hit it this morning. Hit it pretty good. The equities weren't hit. As we came through the day, they start hitting the equities. So let's get into the contract first. Contract down $29. Contraction of volume in a huge way. Okay, so this is pretty cool how this is working out. Yesterday, you could make the argument whether you were higher or lower. What happened yesterday, the spread yesterday went like this. We went to 1183 to 1152. It looked like you're pushing higher with volume first, then you basically didn't break a swing point, but you go down. What you have out here today is that you are at a lower low. You're coming into where the strength was on the 2nd of October, and you're coming into that with a lot lighter volume. So we've done 138,000 contracts. The high of how we came off that last low has 190,000. What I expect you're going to see out here tomorrow, they'll Friday in the gold market, there's going to be some grief happening out here. We'll see whether the market can hold up, reject lower price. Now, let's go to the bond market. Okay, so this one's going to get tricky, too. This is what we have. 10-year bond, down 20 ticks. You've done 1.4 million contracts. Now, that 1.4 million, folks, is a lot of contracts. 1.2 is a good number. 1.4 is a lot of contracts. Now, what we haven't done yet is get to the bottom of a consolidation that this has been trading in. We'll see whether it's going to get down there tomorrow. We're at 127.18. The top of the lows are 127.20. So we'll see whether we can get down to that swing point. The swing point is 126.16. The 30-year, we take a look at the 30-year. 30-year also down on volume. We've done 319,000 contracts. We're at 155.26, which is right at the swing point. You're coming into that swing point with more volume, by 19,000 right now. We'll see if, in fact, the lowest swing point on the 30 is 155. 151. The top of the 30 is 155.10. We'll see tomorrow if, in fact, it can hold the 155.10, and that's where it rejects price, or is it going to blow through it? So the bond market right there is basically setting a probability up that, is the Fed really going to go up in December right now? And there's not enough information as to how it's coming down just yet. When it gets to that swing point, if you break that swing point with volume, your probability goes much higher that, in fact, the Fed will go up. King dollar. What do we have with King dollar? Okay, so King dollar yesterday takes apart the B point with volume. Big volume, too. We're at 97.36. Yesterday, we go topside. We do 47,000 contracts. You're pulling back with 30,000. King dollar is a confirmed ABC structure on the way up. Now, what happens with a confirmed ABC structure on the way up is this. First off, you have to take the swing points out. You get a hold price, and you need volume. It did all of the above. Now, what is happening right now is that 90, we haven't got inside the range yet. In order for this to fail, what would happen is that you need an expansion of volume on the way down, number one, and to get back inside the lower range. Now, what we are going to be able to get out of King dollar is this. If you get the ABC structure on the way up, guess what? King dollar is going to be at $1. If you don't get it on the way up, after it already took out a swing point with volume, that's a big heads up, man. That's a heads up that the Fed will not be going up on rates. That's the way that is shaken out. Now, inside the Index 100 today, what do we have? Well, what's amazing out here, and Tommy and I do a show, the show this morning at 10 o'clock. We were talking about the amount of equities that are getting sliced and diced, and it's a big one, folks. Now the markets, no doubt, are at highs, but it is amazing how many stocks are down 18, 20, 34%. I mean, I can go through these. It's like crazy. You stay right there, folks. Tom O'Brien's TFNN. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now trading down 28, Nasdaq's down 20, S&Ps are off 2. Bottom line, it might as well be a flat market out here. You know, the Nasdaq's pulling back a little bit. Bottom line, that's what you have. Now, as we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy's got an outstanding show. Right after I'm off, 5 to 6 Eastern Standard Time. You can get this right on your cell phone, tfnn.mobi. That gets you the audio. You want to get the video? Just go to tfnn.com on your cell on the right-hand side. Get the full video. Each day, we do, well, Monday, Wednesday, and Friday, we do 9 hours of live programming. Tuesday, Thursday, we do 10 hours. Our man, Mr. John Logan, he is coming back. He gave us a text out here today. Monday morning, he's been recuperating for a while. He's great right now. He's in North Carolina. He is going to be back 8 o'clock in the morning Monday, folks. So stay tuned. Now, as you come over to TFNN, you're going to see right in the front page in the carousel, our man, Mr. Andy Heck, is having a subscriber event. And what is a subscriber event? This is what it is, folks. On November 19th, from 6:30 to 7:30 at night, if you subscribe to the Technimental Commodity Report, which is Andy's newsletter, you will come to this subscriber event. What Andy's going to be talking about is the crude oil prospects for the December 4th OPEC meeting. Okay, so December 4th, OPEC has a large meeting. What Andy is going to go through in this is that the market structure of oil, you know, what it means, what the current state of production is in the U.S., what the cartel's strategy may be, you know, decreasing or increasing market share. Bottom line is that you can do this absolutely free. The way you do it is this. Andy's newsletter comes out today. You can come over to our website at TFNN. You can test drive the newsletter. 30 days absolutely free. As you test drive the newsletter, you'll get the newsletter today. You're also going to come into his workshop on the 19th of November, which is in 2 weeks, which is a mind blower. That's that quick. 6:30 to 7:30. Andy Heck, what's going on?
Hey, Tom, there's so much going on, huh?
I'm telling you, man.
It's a lot. Well, let's go through a couple of macro things, then we could go micro.
Cool.
First thing, I thought really interesting the announcement Chinese are going to abandon the one-child rule, which we knew they would do. But that has incredibly important demographic implications for commodity demand in the years to come.
Yeah, so what happened today, folks, a few hours ago, actually our time, Eastern time, the Chinese said now you can have 2 children per family, which...
Right.
Yeah, which is huge. And
which is huge.
That's been going on since 1974, I think. They only could have 1, right? It's a long time
we have
ago.
to remember that China has 19% of the world's population.
Wow. That's insane.
19% live within the borders of China.
That's crazy, man.
It's a huge number.
That is a huge number,
It's a huge number. So now you're going to actually see population rise there over the coming, decades at a much faster rate. And it's still been rising at a fast rate. So it's going to be very interesting.
So they're going to need more food. They're going to need more of everything.
Absolutely. And that's the point. It really goes to the agricultural commodities.
Yeah.
And eventually to other commodities, which prices are getting cheap. The other macro thing is yesterday, once again, the Fed did nothing, but they sounded hawkish. So the markets basically reacted like they raised rates. Well, at least the gold market did.
No, I agree, and
the dollar,
and yeah, and the thing that's exactly, but the equity market didn't, because if they raise rates, I suspect. Well, we'll find out. Raise rates. Bottom line is that equities right now, folks. If you're looking at PEs or fundamentalists, they're running at 17-1. So you raise rates. The way these companies are leveraged, I mean, forget it. It's toast. It's
toast.
Yeah.
It is absolutely toast. We'll see. We'll see what happens. Let's turn to gold for a minute.
Yeah.
I think tomorrow is one of the most important days for gold in a long time.
No doubt.
Gold, absolutely. So what I have up here, Tom, is a weekly chart of the COMEX gold futures.
Yeah.
And this week we made a higher high. We made that yesterday when we went up above to about 1183. We closed below the lows on the daily chart of the previous day. Actually, we settled above them, but at the end of the day, we were below them. But more importantly, on the weekly chart, if we get a close tomorrow below, let's just see what the lows last week were, below 1163, we're going to have a key reversal on the weekly chart. And that's always an ugly pattern. Now, to confirm that, I'm going to put up now a weekly chart of silver. And we have the same pattern in silver. So technically, tomorrow is a key day for gold.
There's no doubt.
And tomorrow's a Friday. It's crazy Friday.
Exactly.
So, I mean, who knows what's going to happen? But we're in for some volatility, which is what we've been saying, all year, that this market is a trader's paradise. It's an investor's nightmare. But, these key reversals, sometimes we get amazing follow-through in these. So we'll have to keep our eyes on it. I know you'll be all over it tomorrow.
Oh, listen, man, there's no doubt. And what has happened, intraday today, folks, is this. This morning, they weren't hitting the gold stocks. Intraday, they start hitting them. Now they're coming back, okay? And, you still get Newmont up. AEM is still up. If you look at gold, the symbol GOLD, that was 250 lower. Now it's $1.90, and that it's going to have lighter volume, and it is rejecting lower price. So it's a mind blower, man, that they haven't just taken these gold stocks apart, but they have.
Oh, absolutely, absolutely. But we'll see tomorrow. Tomorrow, we get an answer tomorrow from this, so it'll be very interesting where it'll close. Given the way everything has been going this year, it'll probably close right at that level, so no one will know what to do. It's just the way these markets have been.
I'll tell you, man.
Let's take a quick look at natural gas, Tom.
Yeah.
Because that another new low today. What I want to point out here is that the EIA came out with their weekly storage report as of October 23rd. There was an injection of 63 BCF which brings total inventories to 3.877 BCF. Now, all-time highs were the November 2012 levels of 3.929 trillion cubic feet. We are now 52 BCF away. So we are one injection away with probably 4 to 5 weeks of injections to go in this market. So we're going to make new all-time highs. And I think this is what's really weighing on price from a fundamental perspective.
Yeah, and so that would be saying that we're going to make new lows in natural gas, right?
It appears. Listen, the trend is your friend, and the target is certainly 190.20. That's the continuous contract low.
I know.
We got down to 194 on the November. Now we're in December. We're up at 225 because that reflects more a little colder weather here. But you know, they're selling this thing at a time of year where generally it does pretty well on a seasonal basis, and I don't see anything really standing in front of it right now. I think that
I agree,
might
man.
get
It's vicious. You know,
we might get a blow-off low when we finally go over and make new all-time lows in inventories. But I think this is the thing that really weighs on this price here.
Well, we'll probably have to hear of a couple of funds that blew up, too, before a low is made, right?
Natural gas is combustible, so you can blow up with it. There's no question.
You stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. Dow's down 25. Nasdaq's off 19. S&P's off $1.50. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 25. Nasdaq's down 20. S&Ps are off $1.50. We're talking with our man, Mr. Andy Heck, and we are talking commodities. Andy, so number one, you have your newsletter, and I'd like to talk a little bit about the oil structure and what you're going to be doing in your webinar on November 19th.
Sure. What we'll do is, first of all, I'm holding it on November 19th because it gives us about 2 weeks, a little over 2 weeks, until the OPEC meeting.
Okay.
And last year, when OPEC met, oil had come down from $107 to $75 a barrel. That's on the NYMEX active month contract.
Yes.
And when OPEC announced that they were not going to do anything, not cut production in the face of weaker prices, oil just dosed. I mean, it went to 43 bucks in the months that followed. So OPEC has influence over the oil price. And what they've tried to do is they've tried to build market share by getting the U.S. shale production out of the market. Now,
and so the shale production actually kept going, and they reduced their prices, and that was surprising in general to everyone, right?
It still did, but rig counts have come down, and U.S. production is going to fall, so they are achieving that goal. What OPEC didn't count on was demand destruction.
Okay.
They didn't count on a very weak China. And now there's a lot of contention within OPEC because of some of these countries, Nigeria, Algeria, Ecuador, Venezuela.
Venezuela's in money,
broke.
Right?
They're broke. They can't, and they're all selling more than their quotas. And OPEC's ceiling is 30 million barrels. They're selling over 31.5 million, and now Iran is coming to market with more barrels.
Is that per day?
Yes,
okay.
per day.
Yeah.
And now what we're doing here is we're coming into a meeting where OPEC, it's not that clear what they're going to do. So there's going to be volatility around that meeting. So what we're going to do in the seminar is we're going to look at oil market structure. And what is that? We're going to look at term structure. We're going to look at processing spreads, location and quality spreads. And we're going to see if we could come up with some kind of consistent themes over history. And right now, going into this meeting to try to, ascertain what are the likely cases? Okay, they cut production. What's going to happen? They don't cut production. What's going to happen?
Yeah.
The question really becomes, is OPEC really as important to the oil market as they used to be? Because 2 of the 3 of the world's largest oil producers are non-OPEC members, the U.S. and Russia.
That's wild.
So it's going to be very interesting. But we have to remember, Tom, 65% of all the world's reserves of this important energy commodity is still in the hands of the OPEC members.
Okay. What's intriguing about the market structure is that, even, oil got a nice boost up yesterday, the day before. And heating oil and diesel just can't get going, man. It's like
that's right.
Yeah.
And that's fascinating because we're coming into that season.
I know.
Well, it's always diesel season, It's always diesel season. But when it comes to heating oil, we are looking at the winter. Now, it could be that
El
it's
Nino.
suffering.
It's going to be hot.
Right. Exactly. It could be suffering from the same thing natural gas is suffering from.
Wow.
But it also could be something else here in terms of the global economy that's weighing on transportation of goods to market. There's less consumer demand. So, it's a very interesting time. So in the webinar, I'm going to try to put that all together. I'm going to give everyone a short-term trade in the webinar. So I hope to see lots of you listeners out there.
And folks, the way you do it, just come over to our website at TFNN. You can see it right in the very top. You can subscribe to this newsletter now. Test it 30 days. It's free. If you like it, keep it. If you don't, just let us know. You'll be into the workshop either way.
Exactly. So, hey, 2 other things I wanted to cover with you, Tom, if you have a moment.
Yes.
Wheat. I think the wheat market's looking pretty sexy here with El Nino coming. Now, when it comes to grains, corn and beans, this is a U.S.-based market. We're the largest producer and exporter of corn and soybeans in the world.
Okay.
Now, there are other producers, certainly. I mean, the Brazilian production is going to come into question once this harvest is over and as we go into planting season down in Brazil. But when it comes to wheat is it's even more of a political commodity than oil is for many years because governments have to feed their people.
Oh, yeah.
And bread is a staple, and bread is made of wheat. So wheat is produced in the U.S., but it's also produced in Australia and in Russia and Ukraine and South America and Canada and all over the world. And what we're seeing now in wheat is we're seeing that's the one grain that can really take effect from the El Nino. And we're seeing some signs of life. It's been trading in a range 460 to 530 per bushel. But I think that wheat has a good chance of going to $6, maybe even $7 in the months ahead. So there are some products that people can use to express this. Of course, you can go to the futures market, you can go to the options market, or you could use, a product like the Tucrium WEAT ETF product, which is priced around $10 today, which I think is a very interesting vehicle to get on board this wheat, because I think the downside is limited here.
No,
and
I agree.
It's potentially explosive.
Right now, I have the future chart up, folks. Okay, so wheat today was the largest mover inside the commodities market. It did 92,000 contracts, and it's had like 4 different signs of strength off the lows. The first sign of strength was September 14th. If you go over to that the Tucrium ETF, that little baby right now is at 10.02, and your low is laying out there at 9. And you do have a high volume swing high at 12.27, which is always sweet, man.
Right. It's an interesting play, and I think it's worthwhile concentrating on in this market where it's very difficult to call anything these days.
Well, what's really cool too, folks, and this now watch this, because no matter what age you are, it's great speculating on even short-term and longer-term plays. The play about China having 2 babies, right off the bat, I mean, if we were in China right now, folks, and no matter what age you were, the first thing I would do is figure out, okay, what are those babies going to need at 6 months, 8 months, and 10 months old, right? I mean, because I don't know how many folks are going to have 2 kids, but I suspect it's going to be quite a few,
Exactly. So the other thing I wanted to point out, sugar. All right, so sugar moved from below 11 cents up to 14.5 cents. Where we closed today, we closed at 14.56.
Yeah.
But again, I like to look at market structure. Market structure in sugar is shifting. The front month is going to a premium to the next month. So we're now at 14.56 on the March 2016 futures contract, with the May at 14.15. And the July at below 14, which is telling us that there are some worries about supplies. And this is the one thing that really gets agricultural commodities going. So I view the shift from contango, where deferreds are higher than nearby prices, to backwardation, where the prices of nearbys are higher. There's an immediacy to buy, as very important shift in this market.
That's wild. Because what's wild about that, folks, is that, so we happen to be in Florida, and in Florida, folks, okay, you have U.S. Sugar. With U.S. Sugar is one of the biggest lobbyists in the country, and they own the Everglades. Might as well own the Everglades. And their subsidy in the U.S. is, like, unbelievable. Well, bottom line is that if you saw, Bush last night backed away from that subsidy. And that's the first time that any politician has backed away from a subsidy in sugar, because even though we're looking at 14.56, right? But
they're looking at 22 cents.
Yeah, exactly. Yeah. That's what they get paid. Amazing. Yeah. Hey, I guess you got to stay. One more section. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. There you go. Dow is might as well be flat. It's down 4. Nasdaq's down 16. S&Ps are up 1. We're talking with our man, Mr. Andy Heck, and the poor guy is going to be talking like crazy in another hour. We were talking about sugar, though, and I wanted to finish that because I wanted to get off you. That's the key. So when we look at sugar right now, Andy, this says $14.56. But in the United States, explain to us how this works now.
The $14.56 is the price of what they call world sugar.
Okay.
So really, this is sugar that's coming out of places like Thailand, India, Brazil, who are the major sugar producers in the world.
Yes.
Now, there is another sugar contract. I don't have it up here, but it trades at around 22 to 24 cents, and that's domestic sugar, and that's the subsidized price. So we can see every day how much the U.S. government is paying because it's the difference between how much the taxpayers are paying. It's the difference between the price of sugar, the world price of sugar, and the price that it's basically fixed by subsidies.
What a racket, right? I mean,
it is. It absolutely is.
That's a great business to be in. But imagine that, folks, okay? So let's go back in the history a bit. The first subsidies, did they get in place just so that the government will make sure that we have food? How did this work?
Yes. I mean, look, sugar's an important staple, no question, and they didn't want farmers to stop growing sugar because the price was very low. They'd grow other crops, so they subsidized it. And, listen, Tom, the price is $14.56. I remember in 1985, I think it was, price of sugar was 2 cents a pound. So there was no economic incentive to grow sugar.
Yeah, so now watch how this works, which is really cool about numbers and percentages, folks. So we're at $14.56. The companies are getting paid, 22 cents. Okay, so you get a differential of 7 pennies, right?
Right.
Now 7 pennies is 50% of what it's going at, right?
Right. But the companies are getting paid that grow it, but the consumers are paying.
No, I'm with you. I understand that.
The consuming companies are paying. If you're manufacturing, I don't know, anything with sugar in it, which is a lot of product in the United States, you're definitely paying over the price, and it's of course passed on to you and me and every other consumer in the United States.
That's amazing, man. The whole thing is mind-boggling when I look at the aspect of, and what it really has to do with is this. What happens happens, what I've seen happen, folks, between percentages and numbers is this. When, of course, you're at a small percentage, when you're at a small number, at a percentage, you have, there's so much money you bring into the bottom line. You can be at the same percentage of larger numbers, and what ends up happening, and I think this is one of the problems, basically, that the inequality, what ends up happening is that that number turns into monster dollars in the bottom line, because once your expenses are paid, you're talking about a percentage of just large numbers that turn into hundreds of millions of dollars, man.
Right, in the pockets of sugar growers.
Yeah. Right.
Absolutely. And they have, I mean, this is not something new.
No, I understand that. I just wanted to go through
decades. Right, exactly. And by the way, we've also seen this in the past in terms of farm subsidies for corn and
milk.
beans.
No, I'm with you.
We're an agricultural nation.
Right.
That's our basis, and the government has always taken the tact to support the farmer. The thing is, what's really changed when these subsidies were introduced, farmers, whatever they were farming, whether it was sugar or they were small independent families that were in the farming business,
right,
and they were supported by this. Today, you have huge companies who are getting these subsidies because there's very few family farms left. Most of the farms now are owned by Archer Daniels Midland or Bunge these big companies.
Sure, and they can be because, bottom line is that what does happen is that the larger, that you get, the easier it is to do the paperwork and to get all the subsidies. There's no doubt about that.
And actually to support the people running for office who will keep the status quo.
Totally, man.
It's called Super PAC, right?
Yeah, well, and it's it's crony capitalism. That's the sad part of all this, folks. That's exactly what we're dealing with. And
it is our system.
It is.
But I'll tell you one thing. It is our system, and it has faults. But to compare it to any other system anywhere else in the world, and it's still the best system.
No, I agree with that. Doesn't mean we can't fight it, though. I agree.
I agree that change is always, but there's nowhere else in the world like this country.
No, there's no doubt. There's no doubt about that, man. Pretty wild. Okay, brother. I'm going to let you go. We appreciate all the feedback, the great education, man, and we.
Happy Halloween.
Woo! It's Halloween weekend, isn't it?
Yeah, Saturday. I give out candy to all the kids.
It's always. You better give out big candy bars, man.
That's right. Got to get that sugar price up. See you later.
Oh man, have a great one, man. Have a safe one. Oh, think about how many houses used to go to with big candy bars, and how many. Halloween's a trip. There's no doubt about it, man. Okay, so. So let's see. Vertex is going back down again. Let's go look at this one. VRX. In what did happen, the numbers. So Vertex Pharmaceutical, we've just gone from 127 to 110 to 104. What just happened here? So there must be here. Let's see what we have out here. Oh boy, something's out here. Let's see what they have to say. Oh, CVS just terminated Philidor. So Philidor, folks, is Valiant's, third-party drug filler, and that's what just came across here. Bottom line, man, this is going to be such a mess. It's going to be unbelievable. You can see it. You can see it in the stock. You can see the whole ball of wax, man. This is going to look like it's going to be another ABC structure on the way down. It's going to be pretty intense. What the numbers did come out across the fund here today, too. This is pretty intense, man. Ackerman's fund is down 15%. That's a big number, man, to make up. And what does happen, folks, I'm sure, well, I'm not sure all these have been down 15%. I've been down 15% plenty of times, okay? 15% is hard to make back. That being said, it's easier to make back when you're not dealing with hundreds of millions of dollars. These guys, when they're down 15%, they're down 15% on billions of dollars. That is a whole different ballgame, okay? Those large numbers, that is such a whole different ballgame. So we'll see where that shakes out. But it looks to me that, when you do take VRX and you put it up, so it was a one-way shot. There's no doubt about that on the way down. In 3 months, We've gone from 263 to 112. But, you know, this looks to me like we get $55. $55 will be the next stop on this. You know, and, you know, that the further that, of course, it runs and the quicker it runs, what ends up happening there is that the more amount of margin calls come out in the equity. You know, that's just how life goes inside the pharmaceutical business. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow right now is down 14. Nasdaq's off 19. S&Ps are flat. We're going to be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we take a look at some of the higher volume stocks in this market. You have a lot of stocks are getting hit pretty good. You get Apple up $1.16. GoPro's down $4.50. GoPro is breaking. It broke into its IPO price. The IPO was 24, but the bottom line, it opened about 10 points higher than that. We're trading at 25 with monster volume. NXP Semiconductors down 17. That's a monster hit. You got GNC Holdings down 10. Allergen is up 17. We take a look at some of the Dow stocks out here. This is where we're at inside the Dow. Caterpillar's up 35. You get Coke up 8. Oxy is up 38. You got IBM down 39. Walmart is up 33. Procter & Gamble's up 55. Johnson & Johnson is up $1. And if we go back inside these indices and see where we're going to be straightened out here. So the S&Ps are flat. Dow's off 20. The IBB. So let's go over to the IBB for a second, because the IBB, see, it gave it up today. I would have loved to see it just get up a little bit higher. We got to 336. Well, I see. Yeah, I should have been watching that. 336, 337.56 was the low that was established out here on your first leg down. So that's probably, that very well could be all she wrote. Yeah, okay, so watch this. We went to 336. You're going to close under 331. 331 is ice. That's what we came down with, 9 million shares. We did 2.3 today. So that's set up to make a run downtown again. And inside that IBB, of course, you have, talk about some strength. I mean, Allergen is up $17. Regeneron is, that hit, nice. We talk of this stock's a trip. So this stock traded in a 28 points price span out here today, folks. We hit 578. You're at 560. You talk about a counter trend bounce, man. So check it out. Regeneron was 605, $605 on August 4th. Now the low of that, this is technically this is set up beyond belief. When this happens, it's hard to believe that when you look at technical analysis that it could actually happen with numbers that are so large. So check this out. The high of August 4th is $605.93. The low is $578.21. Now, that did 1.9 million. So we come off that high of 605, and you go down to 435. So we almost get down 200 points, right? And bizarre, yeah, that's over the top, there's no doubt. Then what do? Now we go back topside. We're going to do 3.1 million shares today. We get a low of we're going to do 609,000 shares today. That's what we've done. We get a low of 3 million shares. You just came into, and it actually hit it missed it by 21 cents. So the high of today was 578. And the actual high, the low of that high is 578.21. That, folks, is just a mind blow. So what is that? That's a test of the highs, rejection of price. You have lighter volume, and then what you also have is that you have a target. And the target price on the way down is the high volume swing low. And you have two different ones. Now watch this. We go back and we put, this is going to be bizarre, man. You put the channel line, you set a channel line up on this, and it looks to me that the way this thing is set up is that it broke it. Unbelievable. Oh, this is a beauty, man. So it broke its up channel, and it did that the week of the 28th of August. It just came back up and touched the top of that channel line, and that says, Batman, it's curtains. You stay right there, folks. We're going to be coming right back. Dow's down 31, Nasdaq's off 21, S&Ps are flat.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Sarah Brethnock. Market-wise, let's take a look at it out here. Dow Industrial's down 23, NASDAQ off 21, S&P's down 2, gold contract down $30, trading at $1,145 an ounce. Silver off 70 cents at $15.59 an ounce. Tomorrow, folks, Friday, in the metals market, hold on, man, because this is going to be a trip, no doubt, watching this thing shake out. Don't forget, we start programming at 9 o'clock in the morning tomorrow morning. Start Monday. We program at 8 o'clock in the morning. My son Tom and I, we have a show at 10. So stay tuned because the metals market is going to be moving tomorrow, I mean, big time. We'll see whether they can crack it. My take is that they're not going to be able to crack it, but we'll see whether they can crack the baby. Platinum's down 960, traded at 991. We have copper off 4 pennies at 232 a pound. Light sweet crude down 17 cents at $45.75 a barrel. Bonds, 10-year down 26, 127.18. 30 down 2 points and 8 ticks, 155.28. Now, what you had in the bond market is this. This is the third time, too, folks, in about 6 months that bonds have pulled back with volume expanding. We'll see whether that's a change of tune and the bond market takes out a swing low with volume. We're not at the swing lows yet. We did have an expansion of volume. I suspect tomorrow they're going to go after the highs of the swing low. We'll see if the volume contracts. If the volume contracts and you reject price, guess what? That means nothing's changed. If you take out the swing low, that is saying that the probability is higher that the Fed would go up in December. Now, that's the 10-year and the 30-year. And they have Fed funds futures rates, and the probability, so the way that probability goes, people are betting long, but people are betting short. The probability has increased 10% since before the Fed came out yesterday. It was a 35% skew that the Fed would go up on rates in December. After the Fed came out yesterday, that skew is 45% right now. So it's almost a flip of a coin inside the Fed futures market. King dollar down 516 ticks, trading at 97.34. The euro up 56 at 109, and the yen's trading at 121.08. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the S&Ps, let's take a look at them. What do you have? Bottom line, folks, we have a flat market. You know, if we take a look at this S&P, how the SPY is set up, you're just laying right where we were yesterday. Now, here's the bullish and bearish case on that. The bullish case is that the longer that you lay at highs, with or without volume, the higher the probability is that it's going to try to get into, up, and over those highs. Now, for the SPY has been trying to get over these highs for the past year. So you're talking a very long period of time that the SPY has not been able to get up and over the high. And the high that we're talking about in the SPY is at the 213 level or 208. Okay, so that's the bullish scenario. The bearish scenario goes like this. The bearish scenario is that we have been at this level since December of 2014. And each and every time it gets up to that level, the volume dies in the vine, it gives it up, and you get another retracement. In this particular case, the retracement that we had the last time was a disaster, of course, if you were long the market. You know, that went fast and furious 5 days. It went from $209 down to $186. NDX 100, what do we have with the Qs? So the NDX 100, this is same type of setup. The NDX is trying to get into its July high. That July high was 114.39. We have hit 114.03 today. I believe we hit 114.02 yesterday. No, yeah, 114.02 yesterday, 114.03 today. So you tested the high. You did that with 24 million shares versus 42 million. So in that aspect, that test is done. We'll see, you know, what you do have is that it's going to be very tough to pull back on a Friday after we had a day like yesterday, you know, just in a long week. Hey, we'll see where it shakes out. Gold contract. What do we have with gold? Bottom line, gold contract out here. Percentage-wise, it's not a monster move percentage-wise, you know, because we're dealing with higher numbers now. It's a 2.6% move on the way down. Point-wise, big number, $30. We did 140,000 contracts. Now, that's coming into where the strength was developed. Let's put this back. Okay, so move this up so you can see this a little bit clearer. When we came off, the last bottom that we came off, folks, was right there on October 3rd. October 2nd, rather. The low of October 2nd was 1103. We went from 1103 to 1140, and we did that with really nice volume. It's going to be hard to break that down. We did 190,000 contracts at that level. Okay, so picture this. We went to 1145 today. The highs of that low are 1140. I expect on a Friday that gold is going to go into those. It's going to try to get into them. It'll try to break it down. The market can move around in an extraordinary way on Friday. The main reason I expect on Fridays what happens is this, folks, okay? So if you have a market that's going higher, metals market that's going higher on a Friday, this is how this shakes out. We're the last pit. Gold and silver trade 24 hours a day across the world, except on when? On Fridays. When this gold market closes here at 1:30 Eastern Standard Time in the afternoon, guess what? It doesn't trade again on a liquid basis until 7:30 Sunday night. So what happens is this. If you have an expansion that's going up, guess what? People want to get in. They're worried that it's going to expand too much. Bottom line, you get power going up. Now, just the opposite holds just as much and probably more, because as they push gold lower, what ends up happening, no one wants to be holding the bag if, in fact, gold closed at 1:30, doesn't open until Australia at 6:30, 7 o'clock on Sunday night. Guess what? That's just the opposite. So tomorrow is going to be a big number inside that gold market. Now, let's go over, or as soon as we go back, we're going to go over and we're going to talk. Well, first we're going to come in, we're going to talk to our man, Mr. Basil Chapman. Then we're going to talk bonds, and of course with Basil, we're going to be talking markets. This is Tom O'Brien, this is TFNN. Dow Industrials closed down 23, NASDAQ off 21, S&P's off 2. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Solar City closed at $38. Bottom line is that's blowing out the bottom right now. That's at $32.84. The high volume swing low. This is pretty wild. There's a lot of these equities taking out these August 24th high volume swing lows. That high volume swing low is $34. So check out what it did. It was at 34. Does the counter trend bounce up to 51? And now you're trading out there at 32. Starbucks, SBUX. Starbucks come out with numbers, folks. Starbucks closed at $62. That's trading at 61 right now. And LinkedIn has some juice underneath it. LNKD. LinkedIn closed at 217. That's trading at 238. Now, folks, let's go over to our man, Mr. Basil Chapman. And, of course, each and every trading day, Basil's got a great program, folks. Right here at TFNN, you can get it right on your cell phone, tfnn.mobi. That gives you the audio. You want to get the video, just go to tfnn.com, 11 to 12 Eastern Standard Time every trading day. You can call in. You can talk to Basil. Of course, you can also get his newsletter. You can test drive it. Absolutely free. The way you do it, go to TFNN, go to newsletters, trading newsletters. You see the opening call right there. You can test drive it. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. So, is it fall in Boston? Or is it winter yet? Or is it summer or spring?
You would think it was a summer's day.
Oh, that's awesome, man.
It is just fabulous outside.
Cool.
It really is.
That's awesome.
We're preparing. Don't worry. It'll get cold, but we'll appreciate these bonus days.
The way the natural gas market is running, it looks like you're going to have your shots on all year.
Oh, okay. Can you believe that UNG just keeps going down? Well, I guess it's just excess natural gas. That's just the way it is.
No doubt.
Yeah.
So what do we? I think we're looking at the Dow Industrials here.
We're looking at the Dow in 3 time frames. Right here on the left is the daily, on the right is the weekly, in the middle is the weekly, on the right is the monthly. The daily has just bumped into some kind of resistance in the 17,783 area. Now, what is really important about this is it's very, listening to the news, looking at the market, looking at the opening, and the market can be down sharply, and then it can be up. Most important thing is if you can use, and it's very difficult to do, just simple techniques. So this black line here is the 9-period exponential moving average. It looked as if we were about to come down and test that and break it at some point yesterday, especially when the Fed came out and the market started to sell off. And instead, we got that extra run to the top. So this is very important. if I'm going to go to I've already prepared it for tomorrow's, for my opening call subscribers. So what I'm discussing here is that from this low on the 29th of September all the way to today, you see that there's just one ugly down candle. There's sort of a half candle here, but there's really just one. This is the candle of, you remember the 14th of October. We had a very sharp day, and it tested that 9-period moving average, that maroon line.
Right.
So the MACD, the moving average convergence divergence, has been very good, and the slow stochastic has been steady. It's at 94%, and over 80% is good. In the mid-90s is very, very good. So it's going to take something extraordinary not to just pull the market down, but to have the market come down and hold. And the only way I can see it is, well, we had bonds down very sharply today, so I'm going to get into that in a moment. But what I'm looking at here is that on the left, you've got a series of resistance points, and the next one is at 17,783. Well, that's just 30 points away from where we were today. And then the very next one is 18,137. And step by step, the market has been breaking this, I call it the Grand Canyon slide that we had back in August. So this has been a very steady move up. Now we can go to the weekly chart, because what it does show is that there's a trend line resistance coming from the all-time high of 18,351 on the 29th of May, coming down to the high, a lower high, and that was the high around about 18,137, the week of the 24th of July. Then we plummet down to 5,370. Remember, we were talking about this before, that the Dow did take out the October low. The S&P did not, so that was a positive divergence for the S&P. But the Dow has come back very strongly, and now it's bumping into this dashed pink resistance line. So that's going to be an important factor involved. But I wanted to show you something else that, look at this. I'm showing you the monthly chart. Let me make it there. If you look at this candle, the October candle, if tomorrow is not a terrible day to the downside, but just a worst case minus 80, and a best case is either unchanged or slightly higher. This is quite a spectacular candle compared to what we went through back in August. So I'm very impressed, and I keep looking at the sector. I think if you're looking at the short side, rather than the indexes, I think you're looking at the sectors, because even in the NASDAQ, look, it's hard to believe, but the QQQ is within 25, I think it's something like 25 cents of the recovery high that was back in July at 114.39. So I have to conclude that the low that we made August the 24th was a pretty significant low, and that there's just going to be, it has to be horrible news, first of all, to take out even 50% of from where we are now in all the indexes, but certainly to go down to that August the 24th low. So I'm looking at different things. So for my subscribers, we've been trying to short in certain sectors and try to stay long in other sectors. So we're long General Motors, we're short on the other side. We were short Panera, had a great entry at 193, took a nice profit, got back in, just got stopped out, and look, Panera is smashing to the downside. So this restaurant group, and this might be speaking to a number of factors. This might be some kind of weakness in the economy. It's hard to say. Look, Buffalo Wild Wings smashed to the downside. CMG, it did that just recently. It took off from the 757 round number high. It's down to 648. So it's sectors that we're looking at that are starting to weak. The IBB still cannot get any real traction to the upside. It has gone to a leg D, bumping into the 200-period exponential moving average resistance. So when you look at the stocks that I often talk about in my Dow Quartet, that's GE, IBM, M, UTX. IBM is the one, it's really not acting well at all. But look, M has come back very nicely. UTX right here. And these are deep cyclicals. So I think what we're looking at is, I believe we're getting close to some kind of a pullback. Maybe it'll start next week. I'm calling it a pullback. I don't think it's a major top or anything like that. I think it's a potential for a pullback. But I am actually quite impressed with what we're looking at here in terms of the stocks that have gone. You were talking about just a moment ago, you're talking about Amazon is at all-time high.
Sure.
Now I'm looking at it, it's in leg E in the daily, leg E in the weekly, leg D in the monthly. It says be a little careful here. But Facebook, so you've got your leaders, and Facebook is at an all-time high today. So it's a bifurcated market. There's a word that they use in Wall Street, but it's very explanatory because there's a split personality. So you've got your weak stocks.
I'd agree with you, but the split personality has to do with, like, if you take the NDX, okay,
right.
six stocks are 33% of the NDX. So that's,
absolutely, yes.
You get 6 stocks that are running the market.
Which was going to take me to the next point, is that the housing sector, and this is going to deal with the Fed and interest rates.
You stay right there, all right? We'll come right back.
Sure.
Basil Chapman, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. Dow closed down to 23. You get the NASDAQ off 21. S&Ps are down $1.50. We're going to be right back, folks.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Basil Chapman. And, folks, you can test drive Basil's newsletter by coming over to our website at TFNN. Go to newsletters, go to trading newsletters. You see the opening call right there. Test drive it. 2 weeks absolutely free. So let's see. We're looking at the bonds right now, Basil,
right? We're looking at, I call this the triple yield chart, a weekly chart. It shows in white, it shows the 30-year yield.
Okay.
And it shows this is the 10-year T-note yield, the brownie gold color, and the light blue is a 5-year. And what's really interesting is from that, we're always looking in the chart wave at peak Ds and Es. So this was a peak E at the 32.55 level the week of the 25th of June. And the bonds have fallen, the 30-year T-note yield has gone from 3.255 and then plunged down to right here. That was back in June, and in August, 2 months later, it's down at 26.25, 2.625, and then it bounces. And I've spoken about this on my show. I discussed this. If you look at this horizontal trend line, we've been in this area many, many times before. So actually, nothing that much has changed in the bond area. But here's what's interesting. The history of this particular chart is that once you've made your peak, if you have a rally and then it makes this arch formation and then suddenly stops and then takes out the previous high, and that would make it real simple. 30.92 was the high in the week of the 18th. So it doesn't even have to close there, but any weekly move above 30.92 says, be careful, you could be making a U-shaped pattern to go back to the 3.25 area. So this is very interesting. I spent a little time on my show. I don't know if it was earlier this week. I think it was. And I was discussing any move, any close below at the bottom, 2.2749. That says that yields will be going down. So all of a sudden we've got this bounce, and it's really key because the high of the week of the 9th of October was 29.69, and look what happened today. The high is where are we? So let me just get that right, 29.69, and today's high is 29.70. So by 1 penny, we've taken that out. So you have to watch this closely. But here's the issue that I
just want to make sure. So
yes.
We're talking yield, folks, not price. Go ahead.
We're talking about the yield.
Right.
So whatever the bonds do, the yield does the opposite.
Sure, right.
Now this is the key. This is a chart of the iShares Global Timber and Forestry ETF. I've been showing this for a long time. It made a high at 56.69. Now, that has to do, I believe, with the wood, and probably the wood that's involved in the basic economy, what travels from the timberland to your stores to sell as lumber. And that was at 56.69. That was on the week of the 27th of February. Well, we've come down to 44.10. That's $12. That's a 20% decline. Now it's bouncing, but it's so far it's just a bounce. Here is the actual price of the HGX. This is the Philadelphia Housing Sector Index.
Okay.
It made a high. It wasn't a direct correlation, but eventually it started to catch up, and it made a high back in August at 252.20. Then it dropped down to 212, I think it was, 214.39. Week of the 2nd of October, and it's really struggling. And if you look at the shares, if you look at the Toll Brothers, Toll Brothers is really struggling. It's making that arch formation. In fact, this looks like the TLT in a way. And if you look at Lennar, so these are the leaders in the field. Also made a peak right there, C and a D, and now it's pulled back, holding the 200-period moving average. So I think we have to watch. This is the first time we really have to watch very closely on the yields. I've spoken for such a long time about the Japanization of United States bond yields. That means that we should be going to zero, which we've kind of done. This is a very important point because the Dow has gone to all-time highs. It's gone up 3-4-fold, whereas in Japan, they never had that kind of expansion in their stock market. So there is a difference. There's a very great similarity in that we have not an economic expansion, but at the same time, the market itself has gone much, much higher. So I don't quite see what the Fed can do here. I think they're kind of stuck, and it's going to be hard. Maybe the market will do it for them, but I'm not sure they really want to commit at this point. I think they still have 1 foot hovering over the brake, and they're just barely touching the accelerator. I think they're kind of nervous. And
so your point with the yields, of course, is in the housing, is that if rates go up, that real estate would get whacked. Yeah.
And they look at the charts. I don't know. I'm pretty sure that they'd be looking at the Philadelphia Housing Sector Index and saying, how's it looking? And it's looking like it's kind of stalling. And I don't think they really want to do it. Their objective was to have people to be buying houses, to be in the stock market, to be feeling good. And I think that in that regard, to a certain extent, they've succeeded, because it's a lot better to have the Dow at 17,755 than 6,600.
And what does get intriguing, no doubt, and you probably heard, Tommy and I in the morning show, folks, so picture, Tommy's 35, and millenniums have never seen
interest rates go up.
That's right.
You know,
exactly right.
Well, anyone that anyone in the last 30 years, I've never seen them go up because the interest rates have been going down for 30 years. So it will be a shock to a lot of markets when, in fact, or if, in fact, they do go up. Yeah.
Well, of course, the implication is it's a pretty serious implication because not only then are you looking at student loans being even more expensive, you're looking at everything, the cost and the order. Look, you've got a tremendous move here in General Motors. General Motors has gone from 24.62 in August the 24th to the recent high in the 36 area. It's now at 34.75. It has to have something to do with the very low loans that people are getting. Because
it does. What happened, okay, so I happen to know quite a bit about the car loans, folks, because I was going to start buying a lot of them. So what happened in the car business, that was the first acceleration off in 2007, 2008, that you could buy car loans and this is the kicker, get backed by the government. I could open a fund, get backed by government money, to buy those loans and push them out as paper. That's what's going on. That's what has been going on. The car loan business, that was the first one that got liquid again, Basil. I mean, in a month, and that was been going on since 2008, you know.
Right.
And the spread's huge, folks. The spread, you know, you only had to, the broker deal only had to put like down 5% on these car loans. Yeah.
Well, I mean, look at Ford. Well, it made a peak F and gap down and it's pulling back. So, this is very interesting to watch.
Inside the car business, it's been free money for quite a while. I mean, you know, meaning that you can walk in and buy a car, you know.
Well, we've got, I think, 17 million. This is the first time in years that they've had 17 million sales.
Right.
Yeah, these are big numbers. So we're going to be watching rates very closely. And I think the next week or so is going to be very important for the market in the sense that we finished the October buying. We'll see if there's continued buying from funds in the beginning of November. And
we're window dressing again, aren't we? Interesting, man.
Right, but you know what's interesting is over the years I've noticed that markets when the market survives October and goes towards the year's high, it tends to remain high for most of the rest of the year. So this is going to be a very important period. Does that change? We'll see, because this bar that we're looking at right here, and the same thing in the QQQ series, even though, as you said, there's just like a handful of stocks taking them up. This is very much like we saw in the year 2000.
Well, there's no doubt. I remember both of them well, folks. In the year 2000, guess what? January 3rd, shots made a fortune. In the year 2007, January 14th, shots made 1,000. Both markets croaked. See ya. Don't want to be ya.
That's right.
Have a great one, Basil.
Thank you, Tom. Have a great evening.
Stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. markets. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. And if we I want to thank the Tigers and Tigresses inside that den, because when we're doing this program, folks, it's always makes it a lot easier for all the talk hosts. We have a trading room that tell us what's going on in the marketplace. And what had happened, folks, intraday out here, coming into the close at 3:30 Eastern Standard Time, was that CVS was also doing business with Philbro. The drug company that it looks like it's actually owned by Valiant. Bottom line is that they cut ties with them, and they put a press release out at 3:30. What that did with Valiant is that took Valiant from 127 down to 104. Valiant ended up closing at 111. That being said, what's going on, there's something else happening right now, because Valiant's back down another $5. It's trading at 107 once again. This is going to be interesting. I see what's going on. Now you get Express Scripts terminating them too. Oh, this is going to be intense. Yeah, let's see what happens here. So, there's no comment just yet. So Express Scripts, Express Scripts is CVS. I believe that's the same company. So bottom line is that there's problems in paradise out there. Starbucks, SBUX. Let's see what Starbucks has to say. Starbucks was down $1.50 after the close. You're down $1.85 right now. So numbers on Starbucks go like this. The estimate was 43 cents. They made 43. Let's see, revenue. Where's that revenue number? They see same store comp sales up 5%. What's interesting, because that's higher than the estimate. The estimate was only 2.7%, and they see it at 5%. They are bringing up their quarterly dividend. It had been 16 cents a share. They're going to do that 20 cents, so that's bigger. There's got to be something in here they don't like. Let's see. They see their growth continuing at 10%. There it is. Okay. So employee cost increase. That's what's going on. And that's, Starbucks, the world's largest coffee operator, forecast first quarter profit that did trail the estimates as costs for employees in mobile technology is increasing. What's intriguing here, folks, is that we've all, maybe we're not all thought, for a long period of time, with the amount of funny money that has been pushed into the system, you would think that prices had already gone up substantially. So what happens with inflation is this. Inflation doesn't have to do with the amount of money that is in the system, because we have more than we have so much cash in the system, it's amazing. What it has to do with is this, is that do you and I use that money to buy things? Because of the depression, recession, whatever you want to call 2007, 2008, I mean, for many people it's depression, no doubt. There's so many businesses closed that it's a mind blower. What happened after something like that, all of us want to hold more money because guess what? You know that if you have enough cash to get through it, you know, you'll get through it and things will get better. If you don't, you're in tough shape. Okay. So inflation has to do with, number one, how much money's in the marketplace, and then what is the velocity of that that's going through the system. When I look at where we are right now, and I'm watching the dollar, of course the dollar, you know, went up really nice the last couple of days. The expansion on the dollar, however, was really a year and a half ago. A year and a half ago, the dollar went up almost 25% against other currencies. We've been at the same place for about a year now. In that context, I'm watching gold. So gold comes off the lows. They whacked gold today, $30. Maybe they'll whack it again tomorrow. But the gold equities, they can't seem to get them down. They can't really seem to croak gold either. So now the correlation is that, like, okay, if the dollar's going higher and they really can't croak gold, it's like, what's going on? Well, inside a much larger view, and in the context of shopping for food and rent structures, it's like, hold it, man. We have inflation, and inflation is not only here, inflation's here in a big way. Now, it's not coming up out in the CPI numbers, which totally makes sense that it wouldn't come out in the CPI numbers because of the fact that energy has come down so dramatically. You know, the oil market's come down from $100 to $45. That being said, we're at $45, so is it going to go from $45 to $20 next year? I don't think so. If it stays at $45, if it stays the same, and food keeps creeping up, and this is my point inside Starbucks right now, wages are going up. First that was Walmart, Starbucks, and wages are going up, folks, because the cost of living is going up. Okay, now when you start putting that together, it's like, okay. So, hard assets, to me, are where it's at. Because every time that, and I do this correlation inside a cup of coffee, because I'm at Starbucks every day. I'm a Starbucks freak, okay? You get the gist of it. I like Starbucks coffee. That being said, when I take a look at what I pay for Starbucks coffee, and then, so I get, they have this, they have a special machine, right? I forget what the name of it is. They have a special machine. Anyway, I pay $6 every morning for Starbucks coffee, right? I get Starbucks with double espresso on it. So I look at that. I says, okay, $6, $30. That's $130 a month. Then I look at $130 a month. Then I turn around and I just multiply that times whether it's, the rent you pay, something to eat. When you put that together, right? The bottom line is that that's wicked expensive. It's like insane, okay? Sometimes I look at it and say, you just saved that, what can you do? If you start putting together, and just do this, because you'll have fun with it too. I love, but I think the correlations are easier to get in your own mind as to what's going on in the economy. If you just take little things and then put them together and say, okay, how much does this actually cost me on a yearly basis? Now put that against a hard asset. Put it against a house, put it against a piece of gold, put it against something that is strictly a hard asset. And what you're going to see is that hard assets are very inexpensive. We're paying a fortune for things that we don't need. I don't need a cup of coffee every day, okay? Water's great. I love water too. But my point is I'm not going to change that. But when I'm looking at the value of things, I'm saying to myself, you know what, man? I mean, they don't, lots of land, it takes a lot to build. For an ounce of gold, it takes a ton of dirt, folks, okay? This is the ratio that gold companies, the cutoff area is 1/4 ounce of gold per ton. So when you look at that, that's a good cutoff. That's 4 tons of dirt for 1 ounce of gold. And so you get the 4 tons of dirt, you got to mill it, you got to make it into a coin, you got to push it out to the public. When you think about that, it's insane. when you take a look at a piece of land or a lot, you get the gist. I think that we are at the beginning right now of a heavy inflationary era. And in that context, I think the Fed is still not going to go up in December, and they will be behind the ball. And, you know, the inflation genie is probably out of the bottle already. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And if we go over to Vertex Pharmaceutical again, we'll see where this shakes out by tomorrow morning, but this is going to get interesting. So Vertex had closed at $111. It's trading at $100 now. And a Bloomberg article had just come across. We were trying to figure out what's going on here. So a Bloomberg article just come across. Now, in this morning in the Wall Street Journal, folks, it had that it had an article, and what that article was stating is that Vertex Pharmaceutical, the reason that people used them, the reason people use Philidor was that their specialty was, let's say that a doctor prescribes you a prescription, and that prescription is a very expensive prescription, and that your healthcare provider will only pay up to so much money. So what the Wall Street Journal article had said this morning is this, is that if the health insurer kicked it back, the workers at Philidor would turn around, change the number, and kick that back into the health insurer and trying to figure out how much they would pay. They didn't know how much they'd pay, but it's almost just like, you know, they just kept putting prices out, and at one point they'd grab the price. Now, So that was the article this morning. And that didn't necessarily say that they were doing anything wrong. It just said that they would take any price. Now what's going on in this article here, this is only four paragraphs right now, because it literally just came out about 20 minutes ago. No, it came out 15 minutes ago. What this article is saying is that, and Bloomberg's not using any names right now, this is saying that they got hold of a, let me read this for you. So they got hold of, they're saying that the pharmacy that is filling the prescriptions for Valiant has altered doctors' orders to wring out more reimbursements out of the insurers, according to a few former employees, and they got their hands on an internal document. So the document they got their hands on have written instructions to change the codes on the prescriptions so that it would appear that the physicians required or the patients desired Valiant's brand name drugs, not less expensive generic versions. Typically, pharmacists will sell a generic version if precisely not told otherwise. An undated Philidor document obtained by Bloomberg provides a step-by-step guide on how to proceed when a prescription for Valiant dermatological creams and gels. The ex-employee who works at Philidor the last 2 years, ex-employees, more than one, ex-employees who worked at Philidor the last 2 years and who asked that their names not be used in discussing their former employee, confirmed that the prescriptions were altered as the document details. Bottom line, folks, is that, technically this wants to go a lot lower. Fundamentally, I suspect this is going to be just a mess extraordinaire. You're talking, and the next one that the next one that is going to come down this pike here too, that's going to get toasted and roasted, but this won't be the public markets, thank God. It's going to be I believe it's called Thermators. There's a young woman, 30 years old, that has taken, to me, she's taken that whole private equity market to the cleaners. That's going to end up being a monster scandal. It's just the writing's on the wall on that baby. With Valiant, it's like $55. That's where it wants to go to. We'll see how this shakes out tomorrow. But there's a lot of problems out there, no doubt. Now, don't forget, you stay right there. Our man, Mr. Andy Hecht, is coming up next. He's going to be growling and prowling with you for the next hour. And folks, if you do enjoy the program, please tell 3 people. You can get this program anywhere in the world right on your cell phone. TFNN.mobi gets to the audio, video, TFNN.com. Just hit the Tiger TV. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Stay right there. Man, Mr. Andy Hecht coming up next. Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.